Hello, everyone. Hope that you had a wonderful weekend. And again, I'm sorry about yesterday. Did not expect that to happen. I thought that I was recording the video as well as the audio, but apparently I was just recording the audio. But if you listened to the audio, right, it was still pretty good because even I listened to it, right? And a friend of mine, well, a few friends of mine listened to it as well and gleaned something from it. So today we'll basically be, updating our charts, everything that we talked about yesterday, what we expected to happen that, did happen, right? I'm hoping that most of you, spent the time to listen to the audio. So first of all, right, we're going to be reflecting upon the economic calendar, right? As you guys remember, right, we stated that unless there was, a cracking correlation, right, which is either sequential SMT or SMT fill or something of that nature, there will be nothing to do, right? Today, I will be introducing a way that you will know, right, if you can be participating in mirror trading, right, or mirror premium and discount executions, right? So it will basically be you, for example, buying where, you're not supposed to be buying, right? Under the conditions that, the market is bullish, right? Because there are times when the market will be bullish and it will not retrace into discount. But that retracement will happen in another asset class and it will be supported by a higher time frame theory, and that's how you will know and you'll see. And we talked about the movement beforehand and so on. So first of all, is the audio good before we continue? Is the audio good? Let me know the audio is good. I don't want to mess up this time because this time is gotta make take time out of my day to do these things, and I make notes and I have my book in front of me of what I'm gonna talk about and so on. Okay, it's good. So as we stated, right, today is Monday, right, and yesterday we stated that we would like to see a few things happen in regards to the forex market, which we did see happen today. Monday, right, we said that if there is no sequential SMT, there is nothing to do, right? If there's no sequential SMT, and I will not be repeating SSMT every day, right? So I will just say a cracking correlation, right? Which could even be a precision swing point. And I hope that you guys, take the time out to study these things. If you don't understand, go in the community, ask the people that are versed in these things, right? The people that understand, because there are some of you that understand, a lot of you understand, but maybe some of you are, not slow, but you have your life occupied. You have a lot of stuff doing every day. You can't just sit around charts and just be looking at charts. You have a life, you have a family, you have a job. So for you guys, right, I need you guys to be in the community active, asking people questions. And if you are, versed in the concepts that we practice here, I'm, asking you to, lend a hand, help them. So we talked about Monday, right? Monday is usually low probability, right? Monday is usually, worse when you have no high impact news events, right? It's usually a day where you study the charts or, if you see something obvious, which, we did see today, you can participate. Tuesday, right, we have high impact news events, two high impact news events in the New York session, right? So tomorrow we have two high impact news events in the New York session, which will more than likely give us something to do, right? Give us some, injection of liquidity. On Wednesday, right, which will more than likely be one of the most volatile days of the week, right? We have high impact news events, right, during New York session and the afternoon session. So the thing that you should take away from, Ford's factory, the economic calendar, is that every red folder, right? Every high impact news event is an entry. Every high impact news event will create a cracking correlation or justify it, right? You shouldn't be scared of this. You should be happy whenever you open Ford's factory and see this much volatility, right? And again, you don't want to be holding something forever. You get in, you take your piece of the cake, and you get out. While following strict risk management, of course. On Thursday, we have high impact news event during the New York session, right? So today was just a precursor, just the beginning of what we should expect to see this week, right? Due to the fact that last week we had a lot of, choppy price action in regards to the dollar index. We had the dollar index moving in tangent, moving in step, moving lockstep with the, interest rate triad, that, shows us in itself the future. It shows us that this week we will have some volatility. Friday, right, we have non-farm payroll, right? So definitely Friday we can expect volatility as well. If there is a cracking correlation in regards to the weekly cycle, then we could expect, non-farm payroll to go in the direction of that cracking correlation. Or if we see a cracking correlation be created by Thursday's higher or low, in regards to the volatility that we will expect at 8:30 Friday, then we could expect the market to go in the direction of the cracking correlation that is created by this volatility. So here, right, I remember yesterday, if you guys listened to the clip, if you weren't here, but if you were here, you know that we expected the British pound to be drawn to these equal highs. While price was basically right here, right? We expected price to be drawn to this high right here. Here, you guys can see that I have, the fibs here, which, the fibs right here are, referencing the high and low of the previous day, which was Friday, right? And whenever you are using, or, you are searching for, a correlation in regards to the daily cycle, then you need to be referencing your premium and discount in regards to the previous week, right? The previous week. So, for example, here, we would be in discount, right? The high of the previous week, the low of the previous week. This is discount, right? Here, this is discount. Here, this is premium, right? It's, it's a very simple thing to understand. If, you're new, you know that, well, you should know that in premium, right, you look for a reason to be bearish. You're not just going to be bearish in premium. Premium basically just means that, price is expensive, right? And we will get onto, whatever else, it's in the chart that maybe some of you guys already see that I haven't talked about it as yet, but it's very interesting, right? So the reason, right, why I expected the British pound to be bullish was, based on this, right? We were in premium. This is a fair value gap, right? Here we had a new week opening gap form right here. Price propelled higher, right? Whenever we fill a fair value gap, right? Until price breaches liquidity, which it did right here, which is why we expected price to, just run right here. The gaps will more than likely not be filled, as I've said before, right? So here we have this gap remain open, and right now we're looking at the Great British Pound. We have had this gap remain open right here, this one remain open right here, until price breached liquidity here. There was no bearish, right, lower time frame sequential SMT to confirm that this would be bearish. Also, we talked about the low probability market conditions. So we expected the dollar to be ranging today. We expected the euro to be ranging today, but not the pound. The pound is usually the odd one out of the three. So now we'll be talking about the Miro premium discount. Right here, right, look at the US dollar index. You can see that above the 50% of the range, there is a bearish higher time frame PDRA. So this is a forward higher time frame PDRA right here that is being delineated by these orange dotted lines. Here, while price was right in premium, right, this was a bullish higher time frame fair value gap. Whereas we had, a cracking correlation in the form of SSMT occur. We already expected, a higher move in regards to the pound. And here we have a cracking correlation above the 50%, but here we had the cracking correlation below the 50%. Do you understand? So this in itself, shows that the pound is strong. Again, right? And we will just, reflect the euro to the pound. So premium above 50% here, the range of the previous week, right? This is below the 50%. So below here, normally, right, you should be looking to do what? You should be looking to buy, right? Above here is premium, where you should be looking to do what? So here, right, whenever you have sequential SMT occur, like for example, here, the ranges become narrowed, right? And you see that it makes, a lot of sense. And remember, we talked about this. It's not like it just happened and then we just come and, start talking about this afterwards. So due to the fact that we had a higher time frame PDRA here, right? This higher time frame PDRA, which is a 4-hour fair value gap, right? And here, right, we had a bullish higher time frame P area here above the 50%. Here we had a bearish higher time frame P area above the 50%, right? We did not need the British pound to trade back, below the 50%. Therefore, the top half of our range becomes mirrored. It becomes what you would expect discount to be. It has everything to do with where the SSMT formed and where the 4-hour P area is, where the higher time frame P area is. Right, so here we have this tracking correlation below, I'll say it again, 50% of the range of the previous week. Here we have the tracking correlation above the 50% of the range of the previous week. On a regular day, right, we should have the euro and the pound moving in the same direction. Right? So, and forgive me, I said previous week, but this is the previous day, right? This was Friday. So this is the high of the previous day and the low of the previous day, not previous week. So even though the pound was in, quote unquote, premium, right? Even though the pound was above the 50%, it was the better trade. Why? Because we had a higher time frame fair value gap right here. There was SSMT in regards to that higher time frame fair value gap, right? There was no bearish SSMT when price pushed above this one and created this one. So this became liquidity. Everything that happened here happened as a result to what occurred in regards to the US dollar. So the US dollar traded in its premium, in its higher time frame P area, creating SSMT, then broke lower, which sent the pound higher. So if I take all of this off, right, and we go to the 4-hour time frame, you'll see this gap right here, right? It's in premium. And this is a bearish fair value gap. And right now we're, looking at the US dollar. This fair value gap right here is a bullish fair value gap, but it's also in what would be considered as the premium of the range for the British pound. Still, right, this is, a way where you can, navigate. This is a way that you can navigate the, what do I call it? A range bound, scenario or low probability conditions. Because just by looking at the euro right now, you can see that this is, low probability conditions. Just by looking at the dollar, you can see that this is low probability conditions. Right? And it will take, a great deal of volatility, right, to, break above this low, for example, to absorb liquidity or create a SSMT and, push back above this high. Since we, got that all the way, and that was just, an introduction to get your minds thinking, to, understand something that took me a while to understand. You do not need a lower time frame SSMT, a lower time frame cracking correlation. You just need one, right? If you have a higher time frame PDR, so for example, if you have a 4-hour higher time frame PDR, what do you need to look for? A cracking correlation between the cycles of, the day. So for example, you want to see a cracking correlation between the London and the New York session, which would occur if the London, between the highs of the London session or the lows of the London session. Here, we can see that, this is basically, why, price has been the way it has been. Well, the main root cause is due to the fact that the interest rate trials are, have been following the dollar, or the dollar has been following the interest rate trial. And this usually happens, before, what you would call these blank weeks, right? So this week right here, you can see that we do not have a color for it. It's just blank, just as how Friday is blank, right? All of this is tied into doubling theory, right? So as you guys can see, you can see Monday, Tuesday, Wednesday, Thursday, but nothing for Friday. You can see, right, Q1, Q2, Q3, Q4, but there is nothing for the current week, right? There is nothing right here. It's not that it's not important. It is. It's just that we haven't talked about it as yet, right? So do not let this confuse you. Within every quarter of the year, there is 13 weeks. Right? Every quarter of the year is consisted of 13 weeks. So this right here, this blank, space hole, whatever it is, right? Because I didn't, tell the guy that made this about this. So it's just blank. But you guys know that it's, it means something. Obviously it does, right? There's 13 weeks. Each week reflects upon the previous week. There's 5 days. Each day reflects upon the previous day, right? But when you have, the blanks, they're lower probability than, the colored sections of what you would, of the indicator, which, is basically showing you time, right? So for example, right, you could have a correlation if during this blank week, price trades below the previous week's low, which is the low of Q4, fails to trade above this high, right? And then we could see price just, continue higher, right? They like to do this, whereas, they keep price in a tight, enclosed, area, range, before high impact news events. That's, pretty much what, the algorithm is programmed to do. So for now, what do you have to do? If you're trading within the range, you could, practice using what we just talked about, or you just wait for, price to be obvious. You just wait until it's obvious. Is it obvious now? I mean, if you're advanced, yes it is. If you're not, it's, it's not obvious. It's not obvious to probably 99% of, the people that are, trying to trade. If you're in the market right now, you're pressing buy or sell, then you're gambling, because literally price has just been, consolidating sideways. And basically, that's it for the forex market at the moment. After tomorrow, right? And if I look and see the London session, or right, the Asian session has, been set up to, get its liquidity ran, then we will more than likely be, going live in the morning. And the same goes for, Wednesday and Thursday. We have a lot of news this week. Well, I don't think I could go live tomorrow morning. I think I have to go to the hospital. So scratch that. It will probably be either Wednesday or Thursday. For the Forex triad, right? Not the Forex triad, the index futures triad. I don't know what I'm talking about. Right? We did expect higher prices. We saw price just wick low, right? This low right here into this gap, then basically, right? I don't think this is anything, right? To me, this is nothing, right? I like to see candles like this. This is what I hope to trade when I trade, not these tiny fluctuations of price action. I have this red line right here, which obviously means that this was the drawn liquidity for me. This is drawn liquidity at the moment. This is where I expect, if price turns and, fall back within the range to happen after breaching this high. Also, this high right here for the E-mini down, right, is a drawn liquidity for me as well. Currently, right, we need to see a displacement in price, right? Because this right here, nothing here is high probability. And if I'm, that's just me being honest with you. It's not like, oh, you can go in and do something every single day. You can, right? But to me, that isn't the best way to do it. You want to be trading when everything is pointing in, one direction. Everything is obvious. You're in premium. There is a weekly cycle cracking correlation followed by a daily cycle cracking correlation. There is a higher time frame fair value gap or a new week opening gap to support your entry, and that's how here I expect you to do it. Will you find less trades per week? You will. Will you be more accurate? You will be, and that's what we're aiming for, right? And price tends to be less accurate, right? As we, cross over into these weeks right here, right? These blank weeks, right? Out of the 12 weeks of the quarter, not 12 weeks, the 13 weeks of the quarter, this week right here, right? Prior to that, you'll get the most trouble. And that's all I say for now. And of course, we'll talk about this, right? This was just for, analysis. We haven't had, Wednesday's lectures yet, and we haven't even crossed over into the new month as yet. Also, right, I'm not sure if anyone, or everyone got the chance or tried to listen the audio from last night. But yeah, we're working on getting you guys to WAP, right, as soon as possible. That's the goal right now. I see a few emails coming in. I'll be getting to you guys soon, right? There's a lot of you, and I know it's like you're waiting for 3 days, 4 days. It's like but like it's like hectic. It's just one me, and this is why I do not accept. I'm not gonna accept anyone else. I don't care if there's 3,000, 4,000, 5,000 people on the wait list. It's not worth my sanity. You cannot communicate with too much people, right? Right now, this is, my limit, right? That's what it is right now. So yeah, we'll be coming back during the course of this week. I hope that you guys found this insightful, right? A lot of sauce in the first half, I believe. And the audio from yesterday, right? That was good as well. That was pretty good. You can drive, listen to it, let it put you to sleep or something. So yeah, we will come back and the charts will be updated, whenever we have, decent press action, something to do, something that is obvious, right? That is when, I'll be updating the charts again. Talk to you guys during the course of this week. I hope that you have a lovely day.